Testing. 1, 2, 3. Testing. 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 All right. Testing. 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 Good morning, everybody. 9 a.m. Making sure that planning and scanning goes off smoothly. We're back here in sunny West Palm Beach. And I must add, there are palm trees here. Last week in Denver, a lot of neat people there. Absolutely. A lot of interesting traders. And it was nice to be there. But, well, I'll tell you what, I struggled with that altitude. A night and day difference. I yawned every time I turned my head. I did survive Mount Evans. I think it's the highest peak mountain that you could drive up to, something like that, 14,000 plus 500 feet, whatever it is. And I felt dizzier than the dickens. And they got this big sign up there that says, watch out for altitude sickness. Don't fool with it. Anyway, I think that's what the markets are going to be suffering from pretty soon, altitude sickness. So let's get right into it. I have my first thing we're going to start off with is our daily or weekly outlook, weekly sheets, and see what's going on. So let me just, I love to think about the power of positive thinking, and it sure beats telling yourself you can't do anything or you're afraid to try. If you tell yourself you can't, then eventually you just might be correct, and I don't want to be correct when I tell myself I can't do something. So meanwhile, market thoughts, observations. Friday we experienced the reaction that the market is susceptible when geopolitical issues are announced. Obviously, we had a great setup in the Russell. 2 trades in the Russell, if you followed the lead there. One was based off a 60-minute sell signal, and then the market, the only index that was going down was the Russell at the time. And then we saw a little spike up to the moving average, and I said if this market is going to break down, you want to stop yourself in under the low. We took an extensive time period to explain that setup, and the market broke down, and the Russell just, while we were looking at other charts, the Russell just, 30 minutes later, an announcement about the Russian-Ukraine situation heated up, and the market just plunged to about where we had a price projection. So I also said that I wouldn't even touch that market from the long side if we get back above, and I think it was 54. I'll double check with you guys. And here we are trading at new highs at, well, not quite new highs from the morning. We're maybe a couple ticks off, 64. So where's this market going? Well, I think it senses that this jittery action prevails when caution is heightened and when the bulls may be overextended in long stocks. So they get a little overextended and then they get a little panic, and then people that really want to be in stocks, they're snatching up everything they can. Last week I stated that market raids can and do occur in light volume time periods. If you guys look at your sheets from last year, and we have that light volume time period as it exists in mid-August through Labor Day holiday, and after Labor Day holiday, we get traders that come back. All right, so let's substantiate that one little lone statement. Here is our typical AD line page where we look at it, take a look at our daily and weekly both volume as well as our advanced decline analysis that we've set up using, of course, Genesis platform. When we have all our eggs in a row, so to speak, we'll take a look at both 2 different time frames, daily and weekly. So when I define that this is light volume, and I look at the little sell-offs that we have here, we have, again, we're right back to where we've been in almost April and a few other times where we do not see huge volumes in the moves, and we get divergences, such as I can share with you right here, where you can clearly see the on-balance volume moving lower, and as price has been moving up, we saw a little uptick, and you can tell that the volume histogram bars, which is what a lot of people struggle with, we've got kind of a different reading here, don't we? If I zoom this up, you'll see what I'm referring to. The volume histogram bars have been suggesting every day we have lighter volume, but when this market trended up, as we punched through this resistance, as I said Friday, I'm not interested in buying up here, not on the first test of the resistance that we had, and we sold off to the targeted area of support. So what kind of damage do we do with the breadth? Nothing. We really didn't do any damage. We formed a doji, but note that we didn't really see any accumulation of volume there. So in essence, while we do have, and I don't want to be sounding for the sake of complicated here, but on-balance volume's been moving up slightly, advanced decline's moving up slightly, volume histogram's moving down, and here we are sitting right at about an area where we're getting ready to break out, and it looks as if we are going to newer highs. And I would say we are going to get to newer highs as soon as we take out what we call the last conditional change candle right up here. And the type of trading that we saw Friday where the market sold off, held, and it now either one or two things. Got a lot of people out of longs or got people new shorts. That tells me that they're going to take a run for newer highs. That type of price action tells me they're going to run for newer highs. I also get this sense that we are making newer highs in the NASDAQ. And I got to take a look at the leadership here, and I go, well, we are getting leadership from some of the tech names, some of the biotech names, and the funny thing is some of those names from a seasonal perspective start to run out of steam in the next couple days to the next week or so. I look at this on balance volume indicator, and I go, newer highs with not so newer highs, which we've got to watch this with the advanced decline, and not so newer highs with the on-balance volume by any stretch of the imagination. And what do you think I'm going to come out and say? Folks, even if we rip to the upside, you better be really quick and capture some of this upside, because I have a feeling that this market, as we watch day by day in the next couple days, if we don't see an acceleration to the upside in the AD line, and if we do not see an acceleration in volume, we leave ourselves very susceptible to significant bearish divergence in this particular space. So please be aware of that. In fact, it's kind of funny. I look at that type of action, and I think what we need to still be on guard and vigilant defending a potential stock index correction. When we get a stock index correction, remember that not all stocks decline in market corrections, and that's why sector rotational corrections can be tricky times for most traders. And that's what I referred to and I stated last week. So we look at a case in point is the NASDAQ soars to new closing day week and new yearly highs last week. In case you didn't realize that NASDAQ I just pointed to, the NASDAQ 100 soared to a new closing daily, weekly, and a new yearly closing high on all the accounts. So be aware, though, we are forming, as I just wanted to reiterate and share with you, that we're forming a bearish potential divergence pattern with OBV and price in the NASDAQ 100. Moreover, on or about August 22nd, we tend to see peaks in this index, which today's only the 18th, so give or take a week or so. Biotech names seem to weigh in on the Q's rally, but aware this space tends to peak in early September. So, you know, how many trading days is early September away? Names like Gilead Science are nearing or at monthly pivot resistance, and I do want to go over that with you in later this morning. Anyway, we have another light week for earnings and economic reports, with the exception of retail stores like Target, which if you have grandchildren, I don't know why, but it just seems to be the age for people shopping in Target are new parents. I went into the Target here in, I don't know if it's Lake Park, Northwood, it's off North, wherever it is, over here in West Palm, in North Palm Beach, wherever. And went with my son and daughter-in-law. It was a big family event yesterday. Yay! And the amount of people shopping were like their age, late 20s, early 30s with kids. And they stock up on diapers and everything else. And I got news for you. It was crowded. It was incredible. We jumped over to Home Depot. Parking lot was kind of empty. So it looks as if Target was the winner in this area, at least, for the back to school or just maybe every weekly shopping. I'm not sure. So I'm going to keep my eye on Target. But we have earnings for Target, and maybe if they come out with bad earnings this week, I would say going forward it's a different story. Lowe's, and Ross, just to name a few, are some of the other retail stores that we have earnings this week. But I think the major focus is going to be Janet Yellen and the Fed speeches at the Jackson Hole, Wyoming annual event. And my thoughts are this: if the market rallies in the next few days or through month's end due to the Kool-Aid the Fed's going to be serving, because they're going to be serving some Kool-Aid here, there's going to be some mixed feelings about cutting rates and da-da-da-da-da. But remember, one thing that's interesting, Janet Yellen really has said that the government needs to do something more. They need to do something. Fiscal policy changes have to be made because the Fed's, she said that clearly in the last Humphrey Hawkins or biannual testimony that she gave. And you know, I go out to Denver and I listen to people and I look at the buildings that's going around, and there's not a lot of new home construction. What there is a lot of apartment building construction, multifamilies. And I talked to a few people in the mortgage business, and they said, wow, they've really got, you know, cramped, or they got capped on how much commissions they make, on how much points on. Any of you may want to just feel free to chime in if you're in the mortgage industry. It's been just brutal, and it's been over-regulated now. It went from one extreme to the other. People are having a hard time qualifying for mortgages, blah, blah, blah. And so it doesn't give us a sense that everything's as good as it should be. So anyway, that's just the Denver area. And, you know, we went out to Colorado Springs, and we saw Glenn out at Genesis, which was really cool. And really nice trip, I got to admit. And it was really eye-opening because I tell you what, when you go and travel and you look at and see how things really are in the spending habits, if you just observe, be nosy and watch other people, I tell you right now, people are very, very tight with their money. So either they don't have the money, or they don't have the confidence, or again, they just don't have the money. So I'm going to be more increasingly aware we may be forming a bit of a bearish divergence, and we really need to brush up on our bearish inverse ETF symbols to trade, such as the NASDAQ 100. When it does give us a sign of a potential peak here, be watching for QID, which is the inverse bearish ETF on the NASDAQ 100. So it's funny that I wanted to point out that some stocks in the broker-dealer sector, the XBD, they not only look top-heavy, but they look poised to form bearish divergences based on longer-term volume action. And I'm not talking daily, weekly. I'm looking at monthly stuff. Names like Legg Mason, Charles Schwab, Goldman Sachs, J.P. Morgan, and Ben Franklin Templeton. Watch these names for short trades, option trades. And if you don't see short option trades, and/or look for further signs of stock market weakness. After all, if the stock market is healthy, wouldn't one expect the fund asset management firms to demonstrate solid price gains as well? And I kind of find that a little bit interesting. It's more of a specific way of looking at the financial world rather than looking at banks, looking at like Citi and looking at Wells Fargo. Let's look at the guys who are out there managing money, brokerage firms, broker-dealers. I think that might be something that we want to look in at and keep our eyes on that for signs of maybe divergences or stock market weaknesses. That's what I mean by that. So the neat thing is, when you guys come in the room, I kind of define what I'm looking at and give you a little bit more specificity, I think is the right way of saying that, okay? Anyway, gold. I get concerned if we get a daily close under 1288.50. I get jubilated and probably come out of the October call spreads when we see a move back over 1343. 18, listen to me. 1343. Watch for those last conditional change. Bonds, we've got monthly resistance, which had hit 141.22. We'll go over bonds in just a quick second. Quarterly, that's QR2, is quarterly resistance is 142.27. Crude oil, we've got a daily last conditional change above 97.59, support near 92. I'll get into that as well. Wheat, looking for pullbacks to buy wheat near 549. If you get a setup there, using a stop at 536, objective 575. Almost, we've already tried last week. If you look at your sheets, there was a little setup we were looking for at 546. I think that low was pretty close to the last week's sheet. I'm looking for just another probe and a test down there, so maybe it's 549, 550, 551, something like that. Keep your eye there. Cattle, I'm still looking to sell in the October contract. The live cattle near 52.72.5, using 54.05 on a stop. Bullish stocks we have Alexion, Discover Network, DISCA. Also bullish stocks we had, and this makes sense, so that maybe they're going to give it up today because of the way the market is, and it's all calm and cool and relaxed over there in Ukraine now, right? But aerospace and defense, Rockwell Collins, General Dynamics, Honeywell, and then insurers, we had some pops in the insurer sectors like Aflac, AIG, Allstate, and for the life of me, I forgot what HIG is. I'm my bad. HIG is Hartford, I think. How could I forget Hartford? Hartford, isn't that the one with the moose or something like that? Hartford Financial Services. They got I think it's a moose. Maybe it's a deer, a stag. Who knows? Anyway, bearish stocks. Interesting. John Chambers can't pull a win out of his hat to save his life, poor guy. Cisco, Nordstrom's. Johnson & Johnson's has got me a little concerned, and we have a possible bear flag in Baxter, and the same pattern exists in a lot of pharmaceutical stocks. Interesting. So we have seasonal commodity spreads, which we put out at the beginning of the month. The buy D gold, sell D silver, that's spread since 8.5. If you do a spread chart on that, you're going to be like, wow, that really did work. While gold maintained, silver declined. Now, that's an interesting situation because gold is the fear monger, and gold really barely kind of reacted off of the stock market crash. Of course, the stock market came roaring back towards the close on Friday. But looking at silver, silver being an industrial metal and being used in more applications with all this technology and with all Intel, why is silver going down? I think we need to look at silver and the silver chart there. So I want to visit that. So we have a lot to visit today. Jackson Hole, Wyoming conference, I believe, if I'm not mistaken. And if you look at the housing market index today at 10 a.m., we have Urban Outfitters after the bell, and these are our list of earnings, which do check and double check those times. I don't put all of every single earning, but we do put most of the earnings there that are important to the market, and some of them, like for example, I couldn't find the symbol. It's Wynn Macau. It's to be announced. I found that to be interesting because Thursday I want to find out, is Wynn making money hand over fist in Macau? Because if they are, don't you think their competitors are making money hand over fist in Macau? So everyone will be watching in the stock indices, in the stock business, probably be keeping their eye for that one. So dig a little bit on your own. We'll try to do the same to see exactly when that Wynn Macau earning or figure is coming out. I thought that might be kind of interesting to watch. The Gap clothing store, GameStop, Ross is on Thursday, and so you may hard to find. B stands for before, and A with a period stands for after markets close. So there are our big earnings for the week. Limited Brands, Victoria's Secret's another one. I think you've got something Houston, Phillips Houston, a shirt maker, people, retail apparel. They haven't seen an earning profit in a while. Phillips Van Heusen, I think it is. That one I want to see if they kind of pick up. And no, Pete, this is Popeyes. That now, if you travel like me and you go to any airport and you see a Popeyes, that is travel food gourmet right there. I'm here to tell you. Popeyes spicy chicken with a little bit of mashed potatoes and some coleslaw. I don't want to sell that company up. They don't need no selling. If you're traveling, even first class, I'd much rather grab my Popeyes and grab that on the plane than eat the first class food. But that's just me. In any event, I do know we have Hewlett-Packard will be a big one again. So we'll go through these names, you know, every day we go. And I know we have, Perry Ellis is the retail, but I do believe we had the Philip Van Heusen guys. I wanted to see them. Maybe I didn't put it down. I'll double check for you. Anyway, I want to go through some of these names real quick and start taking a look at what we're going to see. When I look at, for example, the Russell, as reviewed by the IWM, you know, interesting. One or two things are going to happen is we're going to have to see, you know, growth stocks come into favor. The world just doesn't move all by itself in technology and biotech, but it seems that that's what it wants to do. And I'm not going to argue with that. Weekly basis, though, I mean, I'm not looking at bearish divergence on a very short-term basis. I'm looking at potential bearish divergence patterns on a weekly basis. So, you know, if we unfortunately, the end of this week, we can see, as I can go over here, and you know, technicals always supersede seasonals, but look at this. Isn't it a strong argument to say, wow, on or about 8/23, this sector peaks out going into October? I mean, that's a very strong seasonal tendency, and we've got building AD line divergences. So I don't know about getting all wrapped and caught up in this thing just screaming right up to the upside. I don't think this is 2000 or 1999 where there's more buying opportunity unless you're really, really, really nimble and you're just going to, you know, kind of look to trade in the morning and look in the afternoon, because the market is demonstrating there is a little bit of risk in the marketplace. All right, so let me get over to our seasonal and planning page and go through some of these names that as I promised. And then we'll go through with some day trading setups. So this is Ben Franklin, and if you look at Ben Franklin, and I look at this and I go, wow, that's a pretty significant trend there, that it just, you know, doesn't see eye to eye with gaining a lot of traction. And all year, Ben Franklin has not made, you know, it's like got that little goalpost double top. When we take a look at our monthly chart, which is to your left, you'll note we have a huge swing backed off, another rally that failed, and another attempt that failed. I mean, this to me does not look like it's carving out a bottom formation by any stretch of the imagination. It looks more like a topping pattern. Why did I say potential bear flag earlier? I don't know. It kind of looks like it's building a potential bear flag. That's why. So I need to kind of watch this pattern to see how the market holds. There is this little, obviously they had a little downdraft, as you can see, near the person's pivots, even monthly, is projecting a bearish outlook. So it hits support first. It could go up to resistance. It just means that from 54 to 56.90, you know, there's maybe some room to the upside. Look what would happen if we got to the top. We'd be at the top of the year in a seasonally weak period of time. So if the stock market's doing great, why aren't these guys breaking out? Let's take a look at Goldman Sachs real quick. I don't want to pick on anyone in specifics, but Goldman Sachs, kind of the same thing. You know, we had a yearly high at the beginning of the year, sold off, and it's taken them all year to come up. And I'm looking at this and I go, what's wrong with that volume on a monthly basis? Come on, Goldman, what is it? Are your hands tied? You're not able to make as much money with government restrictions? I'm not sure what it is out there, but there's something here that. And that's not a sniffle. I'm smelling something that I'm not comfortable with here. And so I want to, that's just Goldman Sachs. And then I look at JPM, and I look at the same kind of thing. Like, why are you rallying on excessive new highs? And I understand Jamie Dimon, and we wish him all the best. And you don't want to hear anyone go through health problems. But why have you rallied so strongly over time without any meaningful volume behind you? You had a breakout, and I mean, you went from 46 to 60, and they couldn't really stand behind that trade, and you're near your yearly highs, and the weekly volume looks horrendously horrible. I mean, that to me is horrendously horrible. When a stock's going up and there's no volume behind it, I get a little nervous. That's my point, and that's the case this week. So let's take a look at Legg Mason. And Legg Mason, I think that picture kind of says it all. And so let's look at Ben Franklin, Templeton Funds. See their commercials all the time. Well, yeah, you know, they've actually done a much better job in the managed fund business, and they've had some longer term volume here. But again, same type of pattern. In almost the first chart that I shared, another little doji there, and I'd have to tell you, I'm more concerned longer term. And when I see SCHW, oops. When I look at Charles Schwab and I go, wow, new high closes on a month over a yearly time period with no meaningful volume behind it. No meaningful volume up here at these highs. As you can see, not the best time to be long this sector. Why can't this space gather any type of meaningful volume behind the stock? So if the stock market's truly healthy, shouldn't the guys who their job is to be in the stock market, make money for their clients, be doing well? This to me is a red flag. I just wanted to point that out to you. All right. Now, that's why I kind of spent a little bit of time going through the various sectors, and I found this to be quite interesting. So definitely, if you don't want to trade them when you get a short signal, then watch those names for signs of stock market weakness, because if they sell this sector off, I mean, you know there's bound to be a problem. Okay? All right, so now let's take a look at one other market. Okay, so the bond market. Bonds are soared to the upside. The stock market recovered. We got right up to, again, monthly pivot resistance. We've got our quarterly pivot up here. We actually saw some strong volume. And that, to me, is a concern, except for the fact that longer term, we're faced with an area of massive resistance. And so I'm actually starting a little bit of a program. I started at the beginning of the week. I started some at the end of the week. I like to do it over time. If the stock market is truly going to recover, then, and I'm dead wrong about divergence, and the bond boys say, yep, you know what, we give it up. We're going to form an equal and opposite, aren't we? All right? And if we don't form an equal and opposite, we've got to ask ourselves, what is going on? So now I go over here to my relative strengths and spreads analysis page, and I say, what is going on? Who's buying the bonds? It's not the Fed. It's not investors because they're buying stocks. Who's buying bonds? What must have been the reason for bonds? And I go, well, maybe possibly all the problems in Europe, as we pointed out to you guys. We had this differential spread relationship between the U.S. markets and I'll just go up here, and I'm going to get rid of all these things here real quick and just to share. So when we take a look at this, and here's the S&Ps, and we look at going back since the beginning of the year, and we can take this back since the beginning of 2013 is my preference, okay? And I take a look at this, and I say, and I just deleted my zero line by accident. All right, so I've got Latin America starting to pick up. I've got everything showing here that we've got the emerging markets starting to pick up. Malaysia's starting to pick up. And the real culprit, look what happened to Italy. Got a little bit overbought. Germany, which is EWG ETF. EWQ, which is France. And so the main European stocks sold off. As you can see, we sold off, and the U.S. equity market finally came into as a delayed reaction. So perhaps when they started to sell off, and let's just examine when did we sell off in really significant time period, was around July 8th. July 8th, we started to sell off. The European market started to sell off on July 8th. So we go over and look at our other relative strength chart, and we say, when did bonds, which bonds are denoted over here in this little fuchsia. So when did bonds start to break out to the upside? And we go back and we go, wow, 7-3 they bottomed out. Between the 3rd and the 11th, that's when bonds started to pick up as Europeans started to crash. So they went, it looks like, if you want to, I think we can connect the dots here and say this fuchsia line, bonds started to go up as the European market started to sell off. So theory is, if the European market starts to recover and everything's all fine and hunky-dory in the Ukraine and there's no more problems, then bonds ought to go down. So we need to watch that relationship. If you want, my suggestions is put up a EWG on your chart, and you can follow EWG, and then we'll have a better idea, or look at the DAX, for example, and you'll have a better idea of what's happening around the world. You know, it's very simple. If the European economy is contracting, and we have that means if the European economy is contracting, let me repeat myself, that means U.S. firms that sell and have exposure in Europe shouldn't probably do well. So it does make sense that since we are an interconnected global economy, that we want to kind of pay attention to how the global stock markets are doing. And that's why when we created these pages that we wanted to make sure that we had those specific reasons. Where's the strength coming from in our own market, the dollar, et cetera, crude oil? Where's the strength or weaknesses coming from the major economies around the globe? Take Russia and China out of the mix, and then we got a better idea of what's happening. And as you can see, we often see that really strong relationship. So when we started to sell off in the European markets, but the U.S. markets didn't, it was a little hang time and a lag time. Now we need to watch to see what happens in here. I can tell you this, that I think if we're supposed to believe that everything's fine and hunky-dory in Europe, then I can say bonds should start to decline relatively soon, because you're just not going to see everything go up all at once. Now, last but not least, daily McClellan oscillator did get up near that overbought territory that we don't like to see. And if we take a look at our weekly, we'll note that we got a zero line recheck on the McClellan oscillator, and let me go back to that one more second. A zero line check. In other words, it got a little overbought. It didn't cross the zero line, and here we stand. We need to watch this very closely over the next couple weeks, friends. Very closely. We're going to have some exciting trading opportunities. The market can move on air, as we all witnessed on Friday. Friday, if you didn't follow up with a, and this is the kind of time period that we come into when there's light volume, you can see the markets, A, not move or really move because there's no one to take the other side. And as we get into this last bastion of kind of holidays in the European sessions, when we get into this last bastion of people closing up, getting back to school, that type of thing, you know, we can see those big moves. I will say, I look at a lot of stocks, and they're all, you know, like Popeyes. I had it up on the chart there. It just gapped higher. I went to Denver, had a layover twice, once in Dallas. They got a Popeyes there, by the way. Fantastic stuff. I couldn't imagine how they could lose money. I really couldn't. But anyway, I wanted to share this chart with you because this is exactly the chart and the stuff that I left up there for you guys. That we said, hey, listen, we talked about we got a 60-minute sell-off. It should snap back, and then you got a profit objective. The market for the second trade took out the low. You'd stop yourself in, and that was, I mean, before you had a blink, the market just went not only to where we thought it would go, it even gave up some more. But that was Friday's setup that we alerted you to, so we kind of nailed that one. I mean, I don't know if you guys were here. You couldn't get any better than that type of assistance, with the Russell giving us the first sell signal, and, of course, everything else kind of followed suit. I believe it was on the 15-minute chart. I said, listen, and I just want to review that. Was it the 15 or the 5? One of these time frames. I said, listen, I wouldn't touch this thing, and I don't know if the annotations are still there. We said we wouldn't touch this market if we got back and we needed to see a last conditional change. So, but anyway, there was the issue that we had regarding the market on Friday, and I just want to go through the setups for today, what I would be looking for. So let's go straight into everything. I'll delete and then I'll repost. So let me just delete everything from Friday. I hope everyone had a great day Friday, because we certainly had something for everyone there. And let's clear up this. We also, and I just cleared it from the crude oil, because we were talking about getting back above 96 double nickel, getting above that pivot and getting back above there, and then, you know, you had a little something to the upside in crude oil. So really, really amazing days. So let's take a look at this chart. All the selling pressure, it died out, and all the buying pressure came right back. This is kind of like, if you look at a daily chart, almost it is an equal and opposite. So it looks like someone pressed the market down. We actually even pointed out if we break below that swing low, you're going to see some downside, which it did. And now you had some upside. So which way is this market going? I'll tell you what I see. I see both the markets getting ready for maybe spacing itself out. And here we have, as we enter, I'm not sure that hurricane season is going to be a big factor, but we've already sold off significantly from the highs. I'm watching for actual reversals coming in. And the one area to get real long, like long USO, is on a daily close over 97.59, and that's this daily last conditional change. So that's one thing I would look at, because this market is actually near monthly S1. We have a confluence in here at, we had weekly support, so there's a lot of stuff that may hold this market in here. And more importantly, crude oil, if we take a look at, and like I like to teach, is why did the market stop here? What is there that stopped the market exactly? Pivots? Possibly. Old price swing areas of interest? More than likely. And the fact that when the market came down here near $95, 95 is kind of a big number. Crude oil kind of trades in $2.50 increments. You go 92 and a half, 90 is, 92 and a half is half the buck, or half the $5 increment. So keep in mind those longer term numbers, those rounding numbers, 92.5, a big number. Note what just to kind of illustrate a point, note that the high or the last conditional change is above 97.5. So you got 97.5, 95, then you go down to 92.5. So 95 is going to be a big number. Daily close over 97.59, and you break a little intermediate short-term downtrend right here. And I would watch for breakouts to the upside on daily closes over 97.5. Something big would be in the works there if that occurred. One of the reasons I point that out is when I see markets that melt down like that on no volume, it's kind of more of a sneaky setup and tricking people to get short, kind of being saying. So in any event, watch that level for this week. Also, when we look at the overall markets, if we're going to break out and this thing's going to go to newer highs to the upside, let's just throw everything we own here on pivot analysis. We'll go with weekly stuff, monthly stuff, daily stuff. I look at new highs, and over time, I don't have new highs on volume. This market is still demonstrating it's I'm going to throw the entire kitchen sink at this market. There's obviously a lot of blue down in here. Okay? This has got a lot of pivot support in here, this blue. So from longer term perspective, you get a daily close under not only a daily close, you get a daily close under that swing low, which is underneath all these, every time period of pivot I own. I got news for you. A daily close under that number, I think it's also underneath a last conditional change. Let me get rid of everything here for you. And again, planning and scanning is not about just day trading or looking at the overall markets. It's about how to trade for the rest of the week. Look what 90s, that's a daily doji in the market, and it's underneath both moving averages. You get a daily close underneath that level. How could you not assume or anticipate that the market will then come to re-challenge that low? In addition, when I look at the market, yes, while we had a little upside here with on-balance volume, we really need to prove this market to the upside. If you get a daily close over the last conditional change candle here, a daily close over there, then I say, yep, it's pretty evident that we'll take out the 1985 3/4 and most likely get up to testing 2,000. Why not? They probably got baseball caps for the S&Ps hitting over 2,000. After all, it's only about 38 handles from here, and we can see that type of price action on light trading sessions. Swing low breakdowns, watch the heck out. Breakout above on a daily close, this last conditional change, I assume this high is not going to stop the market. That will, but somewhere up in there. That concludes this week's planning and scanning. I wanted to point out some important areas for bonds, what's going around on the global front, as well as what's happening with our U.S. equities and what sectors to kind of pay attention to. Everyone, I hope that information finds you well, and we'll let the games and markets begin for the week. Thank you all very much.